Good day to everyone. It's October 20. It's Monday, 3 p.m. Central European time. Let me know if we are good to go. Can you hear my voice? I can see that Ashraf is here. Tim is here after a while. How are you, Tim? I haven't seen you in a chat, our chat room either for some time now. Anis is here as always. So looks like we are good to go. Thomas is also here, our member. We have a lot of markets to cover today. As you know, stocks have seen a pretty nice rebound on Friday. At the same time, the US yields, as you know, are coming to the downside. It's interesting that, or I should say important, that we are still somehow trapped in this sideways price action. Markets somehow are ignoring the US government shutdown, and stocks are trying to retest the upper side of this consolidation, this range, but not really sure if we can break it just straight to new highs. There's still unclear situation regarding, as you know, this tariffs between US and China, but some optimism could be seen in the next few days, maybe because US Treasury Secretary Scott Bessent already said that he is planning to meet with some of the China's vice premier soon. So this could bring some optimism back into the market, but as I said, not really sure if we are going to see straight push to the upside. Now, what is maybe really the most important right now when it comes to the FX or dollar in general, of course, are the US yields. Now, the US yields are coming to the downside. I think this current leg lower is coming since Powell, in some of his latest speeches, somehow confirmed that that there could be a bit challenging situation with labor, and of course, because we are in a shutdown, there could be some bad data that will be released maybe in upcoming weeks, because a lot of paperwork is on hold. Housing starts may not be that good, and this everything could also have an impact on the GDP later on. And of course, that's maybe one of the reasons why the US yields are also coming to the downside. So of course this could drag the dollar even lower. So what I'm looking at the US yields right now is that I'm somehow wondering if we can retest this 3.85% here, and potentially we are still trapped in this triangle. So the idea is that we see a bit of more weakness here, which could allow that dollar will also see more weakness. If we look maybe even better on treasuries, I'm looking here to be a very nice resistance in this box. Okay, so maybe we find some top here between this spike from April. Okay, as you know, that was a very big deal back in April when Trump actually started all of these stories about, around tariffs. So this could be a very nice resistance. So maybe we move slightly through it and then we reverse to the downside. So we are still not there, and that's why maybe there is a bit of more downside for the US yields, which could drag down dollar index as well. But overall, I just still think that that's a triangle in a fourth wave. Unfortunately, it's a very nasty price action, but whenever we are dealing with a nasty price action, and if you don't want to get confused with the Elliott wave levels here, that's why I'm here for you, then maybe just try to focus to basics, meaning that if we are seeing move to the upper side of the range, just be aware that there could be a reversal lower at some point, and that's something that I would be expecting still this year. So as I said, maybe now we are still missing a few more legs down here on the dollar. What happened last week, and what I think it's probably the most important, is that this rally now really looks like it's finished in 3 legs. So last week I said that what if this current rise from the lows will unfold as some kind of a leading diagonal. It I don't think that's possible. Could be expanding diagonal, but the idea with the Elliott waves is that you always go with the most probable wave count. Anything is possible, but of course somehow we have to filter potential outlooks and wave counts here. So the best appropriate labeling at this stage is just to keep it simple. And to keep it simple is that even if we ignore here the history and just focus on the moves since September mid of September, when actually Fed cut the rates, you can see that from there we had only 3 waves up, right? So I'm thinking that we are headed even lower here, and what I would be looking for, maybe some support could be seen around 1970. That's still potential gap that has to be filled, in my opinion, and could happen this week. So watch out for more weakness, then maybe some rebound and even more weakness at some point later on. Now, where I would be wrong, or when I would say that and confirm that we are bottoming, if we see a push above 100.25. Okay, then maybe the things could change dramatically, especially if there would be some serious risk off. But now if we just try to more focus on cycles, and since you know that I'm looking this on stocks on the S&P 500, that we are in a wave 4, and if we will see more upside there, maybe it makes sense that dollar will either stay sideways here or maybe even slightly move to the lower side of this summer range. Summer levels basically still haven't been broken yet. Okay, so here is the idea that we will see a new lows, and then maybe we will see a reversal later this year. Now, looking at the euro dollar here, also still we are seeing a lot of overlaps here lately, with pretty strong divergence on the RSI, which is very common whenever you are tracking here an ending diagonal. So again, here it's not really clear if ending diagonal, or if the market, I should say, has stopped out, because we had 3 waves down. Also we had this broken channel here right around 116.50, and now maybe even this channel could be retested on a pullback, and we will try to stabilize maybe already tomorrow. Keep in mind that now it's Monday, we are trading to the downside. You know how I feel about Mondays or beginning of the weeks, especially if we see some directional intraday flows. Then I would assume that we will experience a Tuesday reversal, and the market could actually rebound later on. So I would be looking for some supports, maybe around 1600 up to 11620. Also here we have as well this unfilled gap from October 5th, yes, when the markets opened on Sunday. So this still hasn't been completely filled. We have seen some very nice push to the upside, but not only euro dollar. I mean, dollar index, as I said, has a massive gap lower, even not to mention dollar yen as well, that we will also cover in a bit. So the idea is that we are still here in some phase where the dollar could see more weakness. But overall, if you just hide the wave counts for a little bit, it's a very nasty price action. And even if we see a retest of these lows here around 115.30, it still somehow would look this as a corrective overlapping drop from that high. And in such case, maybe we'll even have to consider, let me just prepare something else here for you real quick. Maybe then even we will have to consider that this could be an ending, sorry, not an ending diagonal, but a triangle. Okay, so in such case, even if we would drop towards 115.30 area or so, maybe this could be something like that, a triangle in a wave 4, just a little bit of more complex and longer in price, and then at some point we will still try to stabilize and turn higher. So even on a retest of these lower prices, because this really looks like an overlapping price action from the highs, I just assume that we could really stabilize. Okay, because bottom line is that we don't have 5 waves down from the highs. I will see how the market would look if we would break this 114 level. This equals to that 125, I believe, that I showed you on the dollar index. Now also looking at cable, it's not only euro or dollar index. If you look at cable as well, I mean, clearly we had here 3 waves down, and we had 3 waves rally and another 3 waves down. So we have a lot of free wave structures. Now this usually means that you're in the middle of a complex correction, and what's the most important right now is, because complex correction after all can be tricky, but what's the most important is that maybe you go on a smaller time frame and you can clearly see that from that latest lows we have a pretty nice and strong rebound. So that's another pair that suggests that dollar could fall further, and meaning that pound could strengthen. And because that's only one leg to the upside, I think that we will see more strength here after some wave B pullback, and then watch out for more upside for a wave C of wave D. Also, we had a pretty nice divergence here as well. So it really just was another confirmation that you are not in impulsive sell-off, because you're not seeing RSI moving into the extremes, but because the momentum is not that aggressive to the downside, here basically sentiment has changed back to the bullish mode. So we're still sideways, basically at the pivot of this triangle, but as I said, we could see maybe move closer to the upper side of the range after this wave B retracement. Also looking at Aussie, this one maybe even better to look at this wave structure. So that was a very strong recovery, and now basically what's going on, you're just moving sideways. So I think that's an impulse, very strong directional move, much stronger and much more extended lag compared to the current situation or current drop from that latest highs. So I think that's an impulse and showing us where in which direction we could see market going after this pose. So of course, very nice support could be around 0.64 area. Also keep in mind that Aussie is now weakening because of this US-China tariff situation. That's why the Aussie is coming lower. But I'm pretty sure that there will be some positive news coming out, and on the next any very strong dip on the Aussie, I think that this market, this pair could very quickly stabilize. Also, looking at Kiwi could be very interesting. I know that it was one of the weakest because central banks they were cutting rates, but today, let me just give a real quick look. CPI came out higher than expected on a quarterly basis. The expectations were 0.8%. It came out at 1%. So basically, maybe they will have to be careful up here if inflation will keep moving to the upside. We'll be careful with rates, and that's why maybe we could see some stabilization on Kiwi. Now, when it comes to the Elliott waves principle, we have already some overlapping waves here into the very deep 61, maybe even 78.6 could still be retested here, but this whole zone, it's pretty interesting one. Maybe the most appropriate wave labeling could be even an ending diagonal here, okay? And why I love this kind of a potential scenario is because that's a very strong reversal pattern. Let me also draw the lines for you. So this one is also very strong pattern. It suggests that there could be limited weakness, maybe around the 78.6%. As I said, we already have an RSI divergence as well. So if we see another drop here, I would not become too bearish. I just think that we could be closer to even more stronger support. So it's still assume that this market could turn higher in weeks ahead. Of course, the confirmation would be if you see from a new low 5 waves up on a smaller time frame. Then you will exactly know where to put the stop loss and in which direction you should trade, because for now the market is still down, but of course I just assume that we could stabilize here, but it's up to the market to decide if really we will stabilize and rebound and see a rebound or no. But I just think that this one looks quite juicy while the market is holding these levels from April. Also, if we take a look on dollar versus Swiss franc, as I said last time, Swiss franc in any kind of a risk-off environment, Swiss franc could be interesting. We are still somehow sideways there on stocks, and dollar Swiss came quite nicely to the downside. It broke out of this upward channel, so I think that new lows here could be retested. But if the new lows will be seen on dollar Swiss franc, if also we will see much more weakness on euro versus Swiss franc, as said last time, keep an eye on Swiss National Bank. They could be very strong with their rhetoric. Maybe they will again highlight that they could intervene and maybe even move to negative rates, and that's something that could change this direction. Now, from an Elliott wave perspective, that's also something that I would consider, because we have a lot of overlaps here, okay? And it's much slower price action despite having this lower lows and lower swing highs. We are still technically in downtrend, but it's not that strong compared to the previous sell-off here, okay? So this kind of a personality with just simple approach, if you will draw these trend lines, you can clearly see that here momentum is decreasing, okay? And that's something you want to see when you are thinking that we are coming closer to potential ending this bear cycle. So maybe after a new low is reached here, be aware of stabilization. Now let's take a look on dollar yen. So dollar yen also not very useful price action, at least when you're looking at this daily chart. But what could be useful whenever I'm trying to predict where the market could move is, of course, there are two things. The first thing is actually three things: that we are at the upper side of this potential range, then that we came out of this triangle, meaning that we are in a wave C, final advance of this three wave rally. So we know that triangle will cause the final leg up, and then market will reverse south. So that's another thing. And then you also have this unfilled gap. So I think that all of this suggests that, at least for me, that market could continue lower, and we came into this gap zone, very close to the gap zone, but definitely didn't feel it yet. So I just think that there, after some rally that is happening right now, maybe it would be nice that we stay sideways and slow, just to make sure that we are in a correction, because whenever I want to confirm that we are really in a corrective corrective rally, it's the best thing that you have the price personality that looks corrective. So for example, you have a very sharp fall, and then if you have a sharp rise, that's maybe it's not easy to say that that's a correction, but if we have a sharp fall, okay, and then you have something like that will keep prices sideways and limited on the both sides, then this could be much easier to identify it as a correction if the market will not see a strong rebound very fast, and maybe just with one leg headed back to the closer to the previous highs. So you want something more sideways here in the next, let's say, 48 hours or so. Then I think that in the second half of this week we could roll over and maybe finally start targeting these unfilled gaps down there. So that's for dollar yen. And by the way, I also prepared, I didn't share this with our members yet, but I have it here. I also think I prepared another wave count here, another interpretation, which shows that what if dollar yen hits further upside from here without filling the gap first? Well, still fine. I would be looking this to be then maybe with a different wave count, an ending diagonal, and still would be looking for a limited upside and then a reversal down, maybe from somewhere from around 155, 156 area. So still, I think limited upside with this potential wedge. So I still think that this gap at some point will get filled down here. And maybe it will be the BOG that will finally try to bring the prices down here, or of course keep falling US yields. Also keep in mind that a lot of yen crosses already filled their big gaps that we had open there, and this happened because of the risk of flows. Also, let me check my note here regarding dollar yen. Maybe it's not bad idea whenever you are in this kind of a big volatility here, because still we had a pretty big swings here since April lows. It's not bad idea maybe to keep an eye on the RSI. So we've been short dollar yen with members last week, but now again, as I said, maybe it's better to wait on this pullback, and I want to see if the RSI could maybe even came close to this upper side, to this upper range. It would be much more easier than again to sell into rallies rather than chasing shorts here when the RSI is somehow at the lower range here. Now someone is asking for gold. Yes, here it is. So gold, I mean, still an uptrend, just still expect more upside. We could be in a wave 4, we may not be in a wave 4, we could be still in an extended wave 3 here, because after each sharp sell-off, market just easily recovers. So again, after pullbacks, be aware of more upside. If you want to play the safer game here, then you just simply would have to wait on some clear ABC drop, and then watch for potential opportunities at some of the previous swing highs that could be a new support, or swing lows, or maybe even this trend line. So why I think that after all we are not at the end of this wave 5 yet, that we could see more upside, is because I'm looking at the RSI. You can see here that there is no divergence. So usually when you are in final sequence of an impulse, you want to see a divergence between wave 3 and wave 5 highs, right? Here is no divergence. That means that maybe divergence before the final top will be shown, the divergence will still show up. So because we are not seeing a divergence yet, that's why I think that we are just posing for a wave 4, and that we'll see more upside here, and that's still not end of this bull run. Also looking at silver, now we'll take a look on this at a second. So silver still here, maybe we could be in a wave 3, maybe wave 4 will show up soon. So where is the support? Well, it's not that hard to identify. We have to go all the way back to 2011 highs, so that could be very nice support around $49-50. This could be basically a very nice technical level for a new rebound. And why I think that this is possible is because if you take a look on gold silver ratio, we basically came towards this, down to this trend line. We retested it very nicely and we rebounded away from it. And if you even go to the daily chart here, I can count 5 waves down. So maybe now it's time for some consolidation. This is something that could maybe bring silver much easier to potential lower support levels. But as I said, just a correction. Even this suggests, this drop on gold silver ratio suggests that after a rebound we will see more weakness. By the way, if you didn't click subscribe or a like button yet, please make sure to do so, so that we will be listed higher on YouTube by their algorithms, please. Now let's take a look on crude oil. So crude oil is moving very nicely as predicted. As you know, we have been looking for a resistance around $62 to $63 per barrel, and this is now very sharp move to the downside. Looks like an impulse. However, it's the beginning of the week, and I would not just so blindly just try to trust this current current breakdown. I certainly think that there could be some pullbacks through the week. So if you want to be involved on the short side, what you want to see maybe some interesting recovery. You want to see some similar compared to this wave 2, because wave 4, wave 2 of the same degree can be very similar, sometimes in price, sometimes in time. So of course it's appropriate maybe to wait on some stabilization, then maybe look for shorts from higher prices. And I think that this downtrend clearly remains in the cards as long as we are trading below $60 per barrel. 60.40, it's actually the precise levels to watch for, but I think that because $60 is somehow psychological level, that's why as long as we are below that level, it's basically a downtrend. So after some rebound, I think that more weakness could be seen, and the resistance could be anywhere between 58.20 up to $59.10 per barrel. So crude oil, in my opinion, still has some unfinished business here for to the downside. Now, German DAX. As you know, a few weeks back we showed you this wave count. We said that we most likely are tracking at the end of wave 4 at these support levels, and that we are expecting a rebound. So we have seen a retest of the highs, but keep in mind that ending diagonals, okay, have 3 wave structures, okay, in each leg. So even if you're trading 5th wave, you should see these 3 wave structures, and for now I don't see this happening yet. We also have seen very nice retest of this lower trend line of potential wedge formation here. Also let me take a look here on the candlesticks formation. Also we had some, not that I firstly thought that we could be dealing with some kind of a morning star, not really the case yet, but still we had this pretty nice spike here when you're looking at the Friday candlesticks, and now we are recovering pretty aggressively. So my assumption is that that was just a wave B as part of this 5th wave that will take us higher. So if we take a look here on the 4-hour time frame, I think that this could be a wave B, and we are just right now just breaking this trend line resistance. So if you see a daily close here at current levels or even higher, it could be just another indication, confirmation that we are still looking for more upside. Even some alternate scenario shows that if you just try to forget about the idea of diagonal, that this could be maybe even some kind of a running triangle, and still you would see more upside. So I think that new highs can be coming. 25,000 is something to watch for, but it doesn't mean that it will be a close correlation with the US stock market. Keep in mind that those two indexes somehow not always been in a very positive correlations lately. We have seen, I remember pretty well that here when DAX was trading at these support levels, S&P 500 was around the highs. So just if we want to be maybe involved in one of the indexes, somehow I like the structure at least, and the levels on German DAX right now much more compared to the S&P 500. But even the S&P 500, of course, after some pullback slowdown, I would be expecting more upside. Currently, as you know, we are tracking wave 4. Now wave 4 could be a different form, could be a triangle, could still be a bit deeper, more complex correction. But what is maybe the most important to look for is look at the VIX here. As you know, last time I said that if we can move closer to the previous spikes here, this could be quite interesting for potential stabilization. This certainly was the case, so I'm just wondering if we are already seeing all of that wave 4 and we'll just keep moving sideways and then break higher from a triangle, or maybe can there be another surprise and retest of this zone, and while the S&P 500 could retest lower prices. What is my main concern here is that on futures, if you zoom this in, we still have this unfilled gap from that Friday sell-off that occurred on October 10th. So this gap is around, let me put it right here. is around 6,500. Of course, on the cash market, the picture is different. There, gaps were filled because futures obviously trade longer, and this one extended itself on Friday. So I still somehow have different interpretations here, and the first one is that maybe we could be here in a wave B that could even retest or move closer to these previous highs, and then we see another sell-off and finally retest and fill this gap before market will make a very strong rebound later on into wave 5, or if we'll just keep moving sideways and for this week and maybe even till Friday, who knows. Keep in mind that on Friday we will, I think it's on Friday, we'll get the release of the US inflation data, I believe. This one has been rescheduled because of the government shutdown, but looks like that we will get these numbers out this Friday. Also, I think that I read earlier somewhere that someone said that they believe that the shutdown, government shutdown, could end this sometime this week. Okay, so who knows, maybe we will have to wait on some of these important figures to be released, and then let's see if the S&P 500 will either make a triangle in this whole wave 4, or maybe will this wave 4 be deeper and then we'll see more upside. But in either case, we just think that there is still unfinished business on the upside, and despite very strong spike up here on VIX, known as fear index, the S&P 500 basically haven't seen any kind of a real strong or deep retracement. I mean, 3% for 3.5% or so for retracement. I mean, that's pretty small pullback in my opinion. Now let's take a look on some of single stocks and then cryptos for the end. So as you know, this week could be some important earnings: Tesla, Intel, Ford, American Airlines, then we have Coca-Cola as well, Netflix. These are all the markets that we are also covering, as you know, in our US stocks beta services. So if you are interested, make sure to check this out. It's absolutely free. You just register and you can apply for this service with downloadable reports here, and I will be watching the price action for this week, and maybe I will upload a new report in the next few days. Now here, if we firstly take a look on American Airlines, well, basically this one is not looking good in my opinion. I just think that this was a very overlapping recovery here, so it could be, we could be trapped in the middle of a very big triangle formation. But since the prices went through this lower trend line support, I just think that there is a chance that this market will basically see more weakness, and even this trend line could be now acting as a resistance on this latest smaller rally. So I think that there is a risk we will see further upside. Now looking at Apple, this one is after a pullback already chasing the highs again, and you can see that we perfectly touched this yellow box, the support zone here, and now we are trying to recover here. So what's really important is that we have seen this pullback without making a new highs here. So that's why I think that there's still a room for further gains, and still it could be just a wave 3. So there's still plenty of waves that should unfold and take these prices even higher after any kind of pullbacks, and this one is certainly very strong here around 240, 245. So this one, in my opinion, still very bullish. Now looking at Amazon, we've been talking about 210 as a very important support when the price was still trading around 230 or so, and you can see that we now perfectly came into this zone. So maybe this could be a very interesting week for a potential rebound. Now this wave 4, if we compare it to the previous wave 2, you can see that it's much longer, okay, in time compared to this wave 2. So definitely clock is ticking here, okay. I don't want that wave 4 will go just too far in time and price compared to wave 2. So because we are just at this critical point right now, I just think that it's maybe very good timing when we could see a potential rebound. Also, whenever we are dealing with the corrections, wave 4, it usually will retrace for the 38.2% of wave 3, and this comes in, to be exact, around 208, so not that far away, and I think that this is a pretty nice looking support level. So my assumption is that we could rally away from that area. Of course, when this wave 5 would be confirmed as finished, well, if we would see a break above 228, then I think that we could be attacking these highs from back from February. Invalidation level clearly is visible here, because wave 4 must not trade in territory of a wave 1. Berkshire Hathaway, this one still, I'm looking at this one B, not an A, because that's something that we can afford to trade. Here still we looked for this flat correction, very nice rebound, and now some stabilization here. Maybe it's already happening, trying to complete this wave 2 or wave B retracement. So I'm still thinking that more upside could be seen. So no change on this one from our last updates, and also I shared this one in our reports as well. Now Netflix here, maybe if we zoom out a little bit, it would be much easier for me to say that we are closer to end this wave 4 if we would move closer to $1,000, because that was the previous highs. This could be the lower side of this bullish channel, and also it would be at least 23.6% of retracement of wave 3. So usually you will see a wave 4 pulling back for the 38.2%, but if not 38.2, well, at least 23.6 is what I would love to see. So of course market could move straight to the upside, but if I would have to put some numbers out, I definitely think that this is much more attractive level for potential rebound. And we will see the earnings. Of course, maybe we'll get some negative surprises, and if the market would gap to the downside, we know that then some gaps could be filled on the upside sometime in the future, and that's something that would pay attention, that I would try to pay attention on in the next few days, few weeks here. Okay, that's what I had from stocks. And as I said, if you're interested in those US single stocks, make sure to check our website wavetraders.com and look for this section, and just register, and you will see our charts absolutely free. Now, cryptocurrencies. So Bitcoin came once more and retested this important level here, just above 100,000. So technically speaking, it's basically not a downtrend, okay, but who knows, it could be the beginning of a downtrend if we consider this could be an ending diagonal. However, even in the most bearish possible scenarios, you would expect some kind of a rebound, and we are already seeing a rebound. We also been talking and tracking about this 5 waves down that should put at least 3 wave recovery in play, and that's something that is happening right now. So I think that at least ABC recovery will unfold. Now, usually when ABC recovery unfolds, what I'm looking at is that I'm trying to target the previous area of wave 4, and this comes in around 100,016. Okay, so we still have a plenty of room for more upside here, especially if the dollar at the same time will move to the downside. But if this 117,000 will be not be reached by 3 legs, an ABC structure like I draw it here, but rather just with 1 leg, then maybe after a pullback we could expect that even we will see 3rd leg to the upside, wave 3 of an impulse rather than wave C. So that's something to watch for, how the price action on smaller time frames will unfold. For now we still do not have clear 5 waves up, but maybe it could be quite interesting if we really will get 5 waves up on the smaller time frames. However, as I said already last time, maybe some of altcoins can be much more attractive, especially if we consider what is happening with Bitcoin dominance. We said last time that Bitcoin dominance looks like it's turning bearish, so altcoins could be much more attractive. There can be flows happening away from Bitcoin to altcoins because everyone just want to catch the alt season. But keep in mind that despite that 50% drop, well, a lot of altcoins already have made a very nice rebound after all. So still, you will have to be very selective. But if you look just at the wave structures, firstly on the Ethereum here, I mean, we got a very nice recovery here to new all-time highs back in August, and now we pulled back. And this cannot be counted in impulsive fashion for now. It can be counted in 3 waves. We also stabilized here at the previous consolidation here from July, and because we got a very nice rebound here, I just think that there is a chance that we'll see more upside. I'm even wondering if we could see a 3rd leg to the upside. We had a very nice rebound, very nice pullback, now trying to break out of this channel here. So at least a retest of 4,300 and 4,400 is something that I would be expecting, especially 4,400. It's very important, I would say, because that's exact price when this sharp sell-off occurred on Friday, October 10th. Also looking at Litecoin, this one is, I'm looking at this one on a weekly chart. Somehow this reminds me on Ripple from a year back, or even more now, when we also had that coin sitting in this very never ending range, but then suddenly market surprised and moved to the upside. So this one could be quite interesting. So we of course don't know which alts could be the best performers, but at least what I know, which alts have the best wave structure. So maybe that's our edge, and I just think that this is a very nice looking potential triangle here, and if we can break this 150, then of course I think that we are confirming the price action for further upside into wave 5, but moves, who knows, could be very explosive. What I really like here, that after this dip towards very close to $50, we haven't broke the previous swing lows. We hold this trendline support, a lot of liquidations occurred, and now obviously market maybe it's much easier to continue to the upside when a lot of leverage positions have been taken out, have been cleared out from the market. Ripple also still unfinished business to the upside, I assume. Maybe that was a 4th wave triangle, not really the perfect shape, as you know. Firstly, we were looking for this kind of a triangle that has been finished here, but I adjusted the wave count on this one weeks back because this still looks like it's a correction, and somehow this current consolidation looks maybe similar to this consolidation. So I thought that these are 2 consolidations of the same degree, and that's why I came out with an idea that this after all might have been a 4th wave triangle ended here back in December of 2022, and you're now in a new impulsive bullish sequence. And what is missing here? Well, another final 5th wave. So again, if we are really at the end of a crypto bull run, as you know, last time I shared this chart, and we shared this chart on our social medias a lot of times, that we are at the end of the crypto bull run, not the crypto bull run, at the end of the Bitcoin bull run, okay, of that 3-year cycle ending in October. So that doesn't mean that alts will do the same, but certainly means that we could be really headed into the final phase of this stage. And if we will see a push to new highs here on alts, there will be again a lot of optimism hype going on, but that's exactly when we should be careful, especially if at the same time we will see dollar printing new lows and we will see stocks making the S&P 500, if you want, making that final fifth wave to the upside. And then towards the end of the year, we could see some very, very nasty surprises here in these markets. Okay, traders, I hope that you enjoyed this presentation. It was quite long, 45 minutes for today. So once again, if you want to join our community, if you want to track all of those wave counts on even smaller time frames, we have you covered in our services. Make sure to visit us at wavetraders.com. We have a lot of charts there. A lot of alts are sharing, and of course on this Forex global markets, we are also covering a lot of stuff on the intraday basis. So make sure to check this out and be careful this week. Keep in mind, on Friday we have this inflation report, and this could be quite important event, final event for this week, but still plenty of time for market to make whatever they want through the week. Traders, good luck. Don't forget to subscribe and press a like here on our YouTube channel. Bye.